Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is January 12th, 2023. And Bitcoin and the rest of the cryptocurrency markets are about to go parabolic, okay? Quite literally. As you can see from the thumbnail, we're going to look at that. We're going to also look at our DXY, our main indicator, the main reason markets are moving. And we're going to look at yesterday's analysis and how that's played out. If all that interests you, then watch until the very end. Obviously, we're also going to go into our watch list, right? We're going to look at some altcoins, how altcoins are moving. And I have a surprise for you. I've added something to the watch list, something most of you may not expect me to be interested in, but I did add something unexpected. All right, so hang on for that as well. All right, so let's start off with this. The DXY has done exactly what we thought it would. Okay, what is that? We spotted what is called a bear flag in the charts, okay? This is on the small time frames, and I drew it out here yesterday, and yesterday we were in this construction in this rising channel, and we said most likely we're going to see a breakdown of this channel, okay? And that what did I say yesterday, and what have I been saying? That this level right here isn't just any old level. It is a major level, okay? This represents hundreds of days of support that the DXY is breaking, okay? Going on the higher time frame, if you want to really visualize this, the daily time frame shows us exactly that you have this massive head and shoulders pattern, a bearish construction. Then you have this consolidation at the base. So basically, the head and shoulders pattern broke down in December, and then you had a consolidation that went on for quite some time right below it, okay? It's kind of like the last ditch effort for price to regain that level, okay? It's like it's struggling. It's like it's falling. It's like, think of somebody on the edge of a cliff and they're hanging by their fingernails, right? About to fall. That's what this was. And finally, the fall happened, okay? In that small time frame move that we just saw, okay? So this is the fall, right? The last fingernail that was holding on for dear life relinquished the level. And on the smaller time frames, you can see exactly what that looks like. Essentially, here, there's a fall. And because this is another important level, what you saw is a retest and a breakdown. Do you see that? On the hourly time frame, it's quite nicely depicted. So, breakout, retest, breakout. Okay? So that's exactly what we expected. And expect that to continue to the downside if we move on the higher time frame. Let's go back to the daily. And look, we do have a target for all of this, okay? We have a target which should be the height of the head and shoulders pattern. And actually, you know what? One could make the argument that this head and shoulders pattern can be drawn like this. Hold up, one sec. Let me redo this here. Yeah, I don't like that. I don't like that. Scratch that. Okay, let's just take the height of the head from the top to the bottom, right? Take that, superimpose it from the side of breakout, and that puts us in our blue rectangle, this target zone for where we think the DXY should land, which is between 96 and 98, okay? And this is something we've had drawn in for months. we've been tracking the DXY going up and down for months. On this channel, we successfully called the top of the DXY. We successfully charted what that looked like, okay? Not only the primary waves, the intermediate waves, and the minor waves, and the ending diagonal, all that stuff of that year pump, that 12-year ascension, which has finally come to a top, a head, late September, and then the demise, okay? And now, for those of you who may be new, welcome. Those of you who may not be subscribed and may not be that market savvy, let me explain. Why am I looking at the DXY? This is the daily Bitcoin update. Everybody's excited that the cost or the price of Bitcoin is going up. The price of crypto is generally going up. The DXY, I'm just going to repeat this really quickly, is the main indicator, okay? If you think about cryptocurrency, Bitcoin, for example, the king flagship crypto, right now, the market capitalization is about $400 to $500 billion, okay? Billion with a B. At no point in time does the price of such a large asset move because people are pumping billions of dollars into the market. That's not how it works, okay? To move a $400 billion market cap, you need, by 1%, you need $4 billion. At no point in time is any whale or any sort of a group of retail investors pumping $4 billion to move the price by 1%. Right? It's rare. May happen, but it's rare. What fluctuates the price up and down, again, is the DXY, the underlying asset. Most people use the dollar or variations of the dollar to buy Bitcoin, okay? The dollar is the world reserve currency. 60% of all transactions on the planet utilize the dollar, okay? So as the underlying asset, if the value of the dollar goes up, then the price of those assets that the dollars used to buy goes down. Do you understand? It's just a relationship. Think of in the numerator you have Bitcoin, in the denominator you have the dollar, and by that way, in the same way, if the value of the dollar goes down, as it's doing right now, the price of those assets that the dollar is purchased with goes up. That means all risk-on assets, all sort of investments, gold, Bitcoin, whatever. That's why you see markets rising right now. Does everybody understand that? So it's not like a lot of people, even people who've been in crypto for decades, maybe not decades, because crypto's only 14 years old, right? But for a decade, will parrot this idea that the market at large is like some small market cap shitcoin that's pumped by an influencer. That's really an arcane, unsophisticated, backwards way of thinking about it. It's 2023, guys. We know more. The market doesn't necessarily move because Michael Saylor bought this or that, right? Those are OTC, over-the-counter transactions anyways, not done on exchange, okay? Like, let's get more sophisticated. Like, the fluctuation that we see in price is a direct result, more than likely, of the underlying value, the underlying asset fluctuating in value, okay? And the dollar doesn't have any intrinsic value, right? Like, you kind of, to understand Bitcoin, you have to understand basic economics, okay? The dollar does not have any intrinsic value. The DXY, US Dollar Currency Index that we're looking at right now, it's an index, meaning it's a measure of Bitcoin, of the dollar's value as opposed to, or as measured against, other world currencies, all right? 6 in particular, right? You have the Swedish kroner, you have the Swiss franc, you have the Canadian dollar, you have the British pound, you have the Japanese yen, and you have one more that I'm forgetting. But British pound, if I didn't say British pound. Okay? So you have 6 reserve currencies. So also those affect the relative value of the dollar. So I hope everybody can understand that. This is why we keep looking at the DXY. This is why the DXY is such a big deal. And this is not just an opinion. I'm not going to show the chart again because I always show it on the channel. But I've made up a chart where you can track Bitcoin for 12 years. You can track the US dollar currency index for 12 years. And using a monthly chart, meaning every candlestick is worth a month's worth of price action. They're mirror opposites, right? So this is kind of like the confirmation of this thesis, where if the dollar goes up, Bitcoin goes down. The dollar goes down, Bitcoin goes up, right? So that's the first thing I wanted to look at. Now, obviously, you're here because Bitcoin's pumping, and I said it was likely to pump, right? The title of this whole thing is Bitcoin and crypto is going parabolic, okay? And quite literally, I mean, I'm not even, this is not a hyperbole. If you look, ever since the new year, as I showed on the thumbnail, you have parabolic growth, okay? You have parabolic growth. This is exactly what that is. And I really want to emphasize this. Really important, this next point. Don't think arithmetically, okay? Don't think linearly. If you want to properly plan for the bull market, think parabolically, okay? These price rises that you're going to experience in the bull market, okay? If this is the bull market, you're going to experience it shortly. If it's not the bull market, whenever the bull market comes, you're going to experience it. These price increases that you're going to experience are beyond, they're not like this. They're going to be like this. And even more than this, because right now we're looking linearly on a linear scale. Obviously, I have the log switched on right here, but because the variation in price isn't that large, it's not kicking in. But to understand logarithmic growth, it's hard to wrap the mind around because it grows so fast, your head breaks, right? So you may go to sleep, Bitcoin's at one price, and you wake up and it's gained 400, 500%. Like, that's the kind of thing that happens. And if Bitcoin does that, imagine what altcoins may do. Do you understand? The parabolic nature of growth is part and parcel of function of how assets accumulate for quite some time, right? Gather orders and then mark up. There's a reason we've been sideways for 200 plus days. Okay? There's a reason. In that time, orders have been accumulating. Buying pressure has been accumulating. Okay? And all of that pressure is relieved in that parabolic uptrend. Okay? So, and it's not just like, a lot of people, they apply bear market or accumulation market, which is, one aspect of the bear market, the accumulation that follows the drawdown. They apply that same reasoning, that same sensibility to the bull market, and that's false. The market isn't just going to go slowly up, right? And that's why, and you can see this actually, if you pay attention. A lot of influencers are telling you, let's go on the 4-hourly time frame. A lot of influencers today are saying, oh, wait, don't get too excited now. Why? Because they're still thinking like it's a bear market. They're still thinking. A lot of influencers are even saying, don't forget, it's a bear market. This is just a bear market rally, okay? And that is exactly what is going to keep people from investing, okay? Not the fact that they say it, but that mentality, okay? Whether you adopt it or espouse it or not, it's, besides the point. But the idea of the market continuing to do this when in actuality, in fact, the market trend has changed. The trend, the nature of price action has changed. It's changed from side to parabolic up. The only way you can grasp that is with high level, high time frame analysis. Okay? There's no other way. Otherwise, you're just kind of grabbing in the dark, and it makes perfect sense to do what has been happening, right? Just the trend, you know the saying, the trend is your friend until the end. You're just gonna follow the trend, and if the trend has been sideways for the past 200 days, right? 300 days, why wouldn't it continue, right? That's a lot of people's, like, a lot of trading is mentality. A lot of it is psychology. Most people approaching this chart or approaching the cost of Bitcoin who've been checking it on their phones. Maybe they don't even look at charts. They don't have a TradingView account. They're just checking the price on Coinbase, okay? And all they see is, well, it hasn't really been doing much. If anything, it's been going down. For them, it's down to sideways. And there's no reason in their understanding of things that anything would change. Why? Why would it, right? Well, then the answer is, well, you'd have to do analysis, and you'd have to first know how to do analysis, then perform the analysis for you to make sense of why the trend could change parabolically right now. Okay? So let's do that really quickly. I know we've done that before on the channel, but I think it's worth reiterating at this point in time. Let's go to our master chart, okay, on the high time frame, and look at this. Okay, so let's go on the weekly time frame. Our log scale is on. Again, for those of you charting, understand that you cannot represent such large variations of price on an arithmetic chart, on a linear chart. It doesn't work. And a lot of people do it. And I mean, if you're looking at analysis where people are trying to represent Bitcoin from $0 to $18,000 on one chart, and the log scale isn't on, then switch off. If you know any better, I mean, you're wasting your time looking at that analysis because they don't even know how to set up their set their chart up properly to be able to do analysis. And then, you have to have the wherewithal to know what analysis to do. In any case, you can see here our analysis for months, right? For 800 days on this channel has been the same. That we are in minor wave 2, or we'd been in minor wave 2, this flat correction right here, a 3-wave correction, regular run-of-the-mill Elliott wave correction, right? And that corrects these 5 waves, okay? So you get 5 waves up, 3 waves down. After that, very few people understand this, but on this channel, we pride ourselves in explaining and really hammering in the idea of consolidation reversal patterns, or AB bases, okay? That is a function of, it's a derivation, I think, better said, of Elliott wave theory. Ralph Nelson Elliott mentioned it. I haven't seen in any of his manuscripts where he's fleshed it out. So I took it and ran with it. Okay, 2 degrees of AB basing and a pivot. You guys heard it before if you're subscribed. In any case, after that drawdown, essentially all this is, the last 200 to 300 days have been accumulation of the supply dumped on the market by this drawdown right here. That's it. And any time on a higher time frame, smaller time frame, when price changes direction, it first needs to undergo these little periods, these periods of accumulation or distribution, right? The Wyckoff people know this, right? People who practice Wyckoff analysis know this very well. That's an accumulation, that's a distribution right there, okay? So that's all this is. So you when I say the bear market lasted 800 days, it's essentially, or 630 days, that's what I said. the other day. It's essentially 460 or 50 days of the drawdown, and then 200 to 300 days of sideways. Okay, so that's the high time frame analysis. Okay, but you can't do that once again if you have no bearing, you have no background, right? It's very important to know what you're looking at, and it's hard. I mean, if let's say you know nothing of this, right? You're in the dark. You're completely clueless. Why would you invest, right? Some people are saying it goes to 9,000. It might just as well go to 9,000. It's very hard, I think, almost nearly impossible to invest conscientiously when you have no skills in technical analysis. That's why I always say, if it sucks, crypto, whatever, if you're going to invest, you have to also make the investment in your education, or else you're literally playing blackjack. You might as well just go to Vegas, because why would you believe this person and not that person? You have no basis with which to form an educated opinion on price speculation and how it's going to go. The best you can do is say, well, I heard Squawk Box or MSNBC, or it seems like I don't understand it. People who don't understand it say it's fake money, so why would it go up? I think people have just gotten wise and it's a bubble and it's popped, so I'm not going to invest in that. That's fine. That's fine. But again, that's an uneducated opinion. You don't know markets. You don't know assets. You don't know how markets move. You don't know why assets really appreciate in value or depreciate, right? Many a thing in human history have gone up when people thought it was useless, or they didn't understand the applications, or it was early, right? Any early sort of this asset class that we're talking about, cryptocurrency, is only 12 and 14 years old, right? Bitcoin, I think, just had its 14th birthday, but most altcoins are like 2 to 3 years old. So yeah, we're so early. People don't even understand. They haven't even wrapped their minds around the application. Even the people who developed some of these blockchains, some of these assets, these tokens, can't even understand the applications, right? Or the breadth or the scope of the applications, right? But that's not what moves price. A lot of people think it is. Again, if you don't understand markets, I can understand why people are like, nah, it's going to zero. Or there's no reason it could go to 1 million or 2 million or 4 million, whatever, right? But that's why if you're going to invest in this market, you owe it to yourselves to educate yourself at the very least in some sort of market analysis. What moves markets? Why do it's price? Like, you have to ask these questions. That's why not everybody's going to make it, because not everybody can make it. That takes time. That takes curiosity. That takes effort. Or else you just have to choose who you're going to listen to. You're going to listen to me. You're going to listen to Jim Cramer. You're going to listen to Crypto Crown. You're going to listen to BitBoy. Who are you going to listen to? You're going to listen to the guy, the taxi cab driver who's telling you he's buying. Who are you going to listen to? You got to make that decision. At the end of the day, you're going to make a decision. Either to listen to somebody or not to listen to somebody. Or to listen to yourself, not listen to yourself. To invest, not to invest. Might as well make it an educated decision if you think it's serious, right? That's my little rant on, should I buy, should I not buy? You're going to see for the next 2 to 3 months, if you're in crypto, or people know you're in crypto, you're going to get a lot of private messages, a lot of emails, a lot of calls. Hey, should I buy? What do you think about Bitcoin? When we're already, at the first major resistance, maybe we hit 6 figures, that's when they say. Obviously, as an analyst with a clear target, if they talk to me at this point, I'll still tell them, yeah, sure. I think it's wise. But then again, look at all of this opportunity missed out on. You know what I mean? And again, a lot of people in my life personally, I've spoken to for years. Okay? For years about this opportunity. And obviously, everybody's in a different time. Life happens. I'm not blaming anybody. But it has nothing to do with maybe of the 10, and I'm not forcing it on anybody. I don't force it on anybody because it's not easy. It's not easy to watch your money not do anything or go down in value. People have things to do. But of maybe 20, 30 people that I've spoken to, maybe 1, 2 people have done anything about it. It's just human nature. That's why not everybody, you're not going to see a bunch of millionaires from crypto. Not everybody on the block is going to make it. It just doesn't work that way. It takes some conviction, and that conviction comes from perspective and planning. And you can't make a good plan if you have no idea what you're looking at. You have no idea what you're dealing with, right? I think that's very important. I'm glad I said that. All right, let's carry on. So this is our high time frame plan. Okay, this is why we're so confident. This is why we've been so confident in this accumulation level, right? Because eventually what you're going to see is a pop out right here. And this is going to continue until you reach the target. And how is that target achieved, acquired? Simply with basic Elliott wave analysis. Really basic, really simple. It's the principle of extension, where you take wave 1, retracement of wave 2. I'm going to take the nominal low, or the orthodox low rather, which is right here. And you project wave 3 between 1618 and 2 Fibonacci extension of wave 1, retracement of wave 2. Now, remember, I'm on the logarithmic scale. So even though your eyes are seeing this as being simply just, a ways up from here, it looks like the same height as this. Actually, if I went on the linear scale, but the linear scale can't capture it, but if you really understood the lines, the scale gets smaller and smaller to be able to capture the rise. I'm looking at a 12,000% increase or something like that between where we're at now and the target. But you can't see 12,000%. It doesn't look like 12,000% on the screen because we're trying to represent parabolic growth on a linear screen, on one chart. Okay? But that's why, it goes back to the topic of today's live stream. Crypto is about to go parabolic. It has to. It has to be able to go through this wave, right? And why is this going to be one of the biggest bull runs in all of history? A few reasons. One, the DXY is going to dump for the first time in 12 years. It's been up for 12 years, going up, right? Obviously, it's not going up in a straight line. Nothing ever does. But the DXY has essentially been matriculating up in an impulse for 12 years. Finally dumped. Finally started to dump. Okay? So that's one of the reasons, right? Because we talked about how the DXY is inversely correlated to Bitcoin and cryptocurrencies and risk on assets, all that stuff. The other reason is that this is a wave 3. What do you know about wave 3 in Elliott wave theory? Wave 3 is typically the longest and the most impulsive of the Elliott waves. Okay? So this was wave 1. People thought that was cool. That was a great bull run. You're about to experience minor wave 3. So if this was cool, this is going to be even cooler. Okay? If this was intense, this is going to be more intense. If you thought this was quick, it took about 1 year to go from 4,000 all the way to 60,000. This should be from 16,000 all the way to a couple million in less than half the time. Because wave 3 typically moves faster, okay, and longer than wave 1, right? And then wave 4 typically takes its time, right? You get triangles, you get complex corrections here. But that's what you typically see. That's a regular 53535 extension. Wave 1 starts it off. Wave 2 takes about the same amount of time as wave 1 took, okay? Usually a quick correction, a sharp correction down between the 0.5 and 618 Fibonacci retracement level of wave 1. Wave 3 that's where your socks get knocked off, and it just runs and runs and runs and runs. Okay, and it runs in such a way that it's faster. It usually takes less time than wave one, and it goes at least the same level or the same amount as wave one. So one Fibonacci extension. So it's usually just as long as wave one, but not usually just as long as wave one, minimally as long as wave one. Usually 161 to 200% the size of wave one. Okay, this is all basic Elliott wave theory. Okay, this is why we're bullish. This is why we're saying Bitcoin and the rest of the cryptocurrency markets are going parabolic. Okay, you can't say that without that high time frame analysis, and you can't do high time frame analysis if you have no tools to analyze under your belt. Okay, gotta know a little bit of excuse me, Elliott, Gann, Wyckoff. You gotta know something. Basic support and resistance. You gotta know something, or else you're just kind of you're guessing. You're guessing. Okay. So yeah, don't be surprised to see more of that. Okay, here's another view of what we were just looking at, minus all of my annotations. As you can see here, 5 waves up, 3 waves down. That's exactly what we see in Elliott wave theory. Okay? It's the basic analysis. And what do you see here? Your consolidation reversal. That's like after you go down, you do some sideways consolidation, some sideways accumulation. Then, here, I'm going to tell you something else. Excuse me. Look at this. Right here. Do you see this? We're about to break out even more violently because the top resistance of this accumulation reversal pattern, right, that lasted 200 some odd days, 300 days since May or June. It was June of 2022. 210 days, okay, in Bitcoin. In a lot of altcoins, it was 300 plus days. Okay, but 210 days of sideways to downwards accumulation. Okay, 2 degrees of AB basing and a pivot. That's right now just about to be broken to the upside. What happens when you break something to the upside? When you break a 200-day resistance, you get fireworks, okay? The fireworks are getting started. This segues to the next point I want to make. A lot of people are going to try to trade this. Everybody knows, crypto has democratized trading. You don't need a stockbroker. You don't need an Ameritrade, a Fidelity, a Schwab broker. You don't need anything. You don't need a license. You can open up a Coinbase account. You can open up a Femex account. You can open up a KuCoin account. You can buy anything. You can buy Bitcoin. You can buy Bonk. You can buy whatever you want. You can put all the money. You can put, a few dollars. It doesn't matter. As a result, people have figured out that, if I buy when it's going up, and then I sell when it stops or starts to go down, I'll maximize my return. That's a normal, natural way of thinking. At least when I first got introduced to this space, that's exactly what I thought. I'm going to, and I had a discussion with one of my friends. I said, the best way to do this, and I'm going to do this, and I'm going to win at it. I'm going to buy every single time it goes up, and when it goes down, before it goes down, I'm going to sell. I told him that. I said, that's my plan. I said, dude, that's the smartest thing ever. Like, I'm a genius. And yes, that is a great, great thing to do, but it's easier said than done, okay? And after a couple years trying to do it and thinking about that, I figured, okay. Because this was my thinking over here, okay? I actually lost a lot of money here because I wasn't letting my winner's ride. I wasn't riding the wave. And I was over trading. Okay? And over trading is maybe the number one way to mess up a bull market. We're going to go into a bull market. A lot of people, even though they're present, even though they're paying attention, even though they're exposed to this space, they're going to lose money or not make as much money because they're going to overtrade. They're going to get spooked. Again, no plan, no perspective. The price is going to go up and it's going to go down a little bit, going to go up more, come down a little bit, going to go up more, come down a little bit more, but then keep going up, right? Again, one step forward, 2 steps forward, 1 step back, 2 steps forward, 1 step back, or however you want to say it. It's just going to be the regular 5-3-5-3-5 extension. Every single time it dips, every time it retraces, they're going to get scared. They're going to sell or think that they're being smarter than the average bear. And what's going to happen is they're going to miss that next pump. Okay? I did it. I'm speaking from experience. You don't want to do it. What you want to do is ride the wave. Get in and just leave it. Completely fuck off for a few months and make life-changing wealth. Do not overtrade. I will say this much. If you've bought any crypto within the past 200 to 300 days, you've literally bought the bottom. I'll repeat. If you've bought any cryptocurrency within the last 200 to 300 days, you've literally bought the bottom. Not for every asset, but for most assets. For 95% of assets out there. Okay? We've literally been in this range of accumulation for 200 to 300 days, right? You've literally bought the bottom. Whether you've purchased Bitcoin at 24,000 or you purchased Bitcoin at 15,000, it's inconsequential at the end of the day because of what we're about to do. You have to have some perspective, but you don't have that. You don't have any perspective if you don't know how to read a chart. Do you understand? So it's really important. I mean, the main purpose of this channel is education. I can't stress it enough. If you're going to be successful in this space, or any space, let's say you trade stocks, you have to know how to fucking read a chart. Okay? You have to. I don't understand. Like, there's no excuse not to this day and age. And if your excuse is, well, you know, my father, my uncle just went to a financial advisor and, you know, they said, you know, to diversify and put this, that's fine. But there are stock crashes too. There's about to be a stock crash in May. A lot of people are going to lose a lot of money because they don't know how to read. They don't know how to read the pattern. So stocks are going to go up marginally, but they're going to come down even more in a few months. Not so crypto, but stocks will. A lot of people are going to lose a lot of money, even though they're paying some financial advisor to manage their portfolio for them. Or, you know, they took some advice from an investment professional, right? Who said, diversify. These are low risk investments, blah, 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 blah. You have no one to blame but yourselves. It's 2023. TradingView exists. The internet exists. If you're going to put your money in, you have to know what the hell you're putting your money in. I can't stress this enough. Okay? So, ride the wave. Don't try to overtrade. You know, you had Crypto Zombie, K-Dub from Crypto Zombie. He's not bad, but he was kind of bragging about, you know, calling the fact that we were going to hit 18,200, between 18,200 and 18,300. Yesterday, I watch a show, by the way, from time to time. He drew this trend line, and he said, we're likely to hit this trend line. No shit. You know, that's a trend. That's a resistance. We hit it. And he's like, congratulations to everyone who took that trade. If you took that trade and longed on margin or whatever, and took profit over here, you have no idea what you're doing. You're literally selling the bottom. Why the hell would you take profit over here when you could just leave it? Because it's going up a lot more. And it already has started. Do you understand? That's over trading. People going onto channels calling for price targets when price targets on the smaller time frames, if your price targets are not on the weekly or daily time frame, at the very least, you're doing it wrong, because you're entering a trending market, right? Any upside target is going to be hit eventually. It's not a question of that. It's a question of where you're going to take your entry and when you're going to take your exit for that move. You got to look at it as one contiguous move on the high time frame. That's how you play this, okay? I think we've made our point. Let's move on to some altcoins, and then I'm going to show you my my surprise altcoin investment that many of you may not expect, okay? And I'll tell you exactly why I did it and what my rationale was behind this, okay? Ethereum, same thing as Bitcoin, right? We're just looking small time frame here. Going parabolic. Boom. This is the, whoops. Sorry. Here we go. This is the beginning. Expect more. That's all I can say. It doesn't matter how it goes. It's gonna go. It's gonna be choppy, up and choppy, up and choppy, and then at some point it's gonna retrace a little bit, and then it's gonna continue. It's gonna do that for a few months. That's it, right? If you're so concerned with the ups and downs, the only reason you should be concerned with the small time frame up and downs is if you're building a position on leverage or on margin, and you want to protect against downside. You want to protect against being hit, by a stop loss or a liquidation point. That's literally the only reason. If you're on spot, meaning you're just buying the asset, you're not leveraging your purchasing power, just buy. Close your eyes. Not financial advice, but just buy. Who gives a damn? I never understood people buying on spot. At least, let me clarify. Ever since I started trading professionally, I did not understand people buying on spot afraid of downside risk. Like, what downside? You literally have no risk. If it goes down, it goes down, and then eventually it goes back up. So the only risk you should be concerned with if you're buying on spot is, especially in a bear market or at the end of the bear market, the only concern you should have is if the asset is going to be a scam and disappear. That's literally the only concern you should have. But even if you bought in the middle or at the end of a bull market, worst case scenario, you wait a couple years before it goes back up. Okay, and I know a lot of people don't want to wait that long, but we are literally at the end of a bear market. You don't have to be fucking Ralph Nelson Elliott to know that we've been in a bear market. Price has been down for years, right? What the hell are you waiting for? If you're that concerned or you're that skittish on making the buy, then something else is going on, right? You really have to clear up that understanding. And I really think, more education gives that perspective. It gives that understanding, that confidence to make those investments if you need to make those investments. Okay, anyway, more of the same here. Litecoin, parabolic. It's going to keep doing this ad infinitum, or seemingly ad infinitum, for many months, okay? I'm not going to bother trying to count these Elliott waves, and the only reason you should be doing that once more is for the purpose of building a position on leverage. That's it. Otherwise, just close your eyes and buy. You're actually really lucky if you're listening to this and you're interested in buying, to buy at these levels, because we still have yet to experience face melting, attention grabbing uptrend. This is kind of upwards consolidation, these leading diagonals. But that stuff is coming. It's coming, and it's coming Like, it's right around the corner, as you can see. Looking at synthetics, this is clearly a major resistance that you're about to break here. And, yeah, you're going to get a big move from that. So, XRP, same thing. You're clearly at major resistance. Crypto is about to go parabolic. All these assets are on major resistance. You're going to break that to the upside, and boom. And guys, just like I showed you, Bitcoin was about to break 200-day resistance. These assets are also going to break high time frame resistance. These altcoins, rather. Right? Here for XRP, it's not 200-day resistance, but it's about 60 to 90-day resistance, something like that. Yeah. Okay, Cardano, same thing. Look at that. You know, I put this line in a few days back, and this is clearly about to break. All right, so we've been up, we came, we did something like this, which is what you should expect. Nothing goes up in a straight line. Expect intra-wave consolidations, intra-wave corrections like this, and continuation. That's it. The trend is up. The trend is parabolic right here. Yeah? Expect more of it. Here for Algorand, you're going to break a major resistance, okay? High time frame resistance. This one is a couple months, I think. It's almost 2 months, okay? And I put that dotted line, dashed line, whatever. You can clearly see it. We came up to the line, we retested, and breakout, okay? So that's a quintessential RS flip. Means we break resistance, we turn it to support, and we break out, okay? Dodo, same thing. You can see major resistance is about to break. And yeah, of course, your average kind of casual speculator is going to then, they're going to see, and it's going to gain their attention once, you know, the news picks it up, or, you know, everybody starts talking about it. But you don't have to do that. And then, you know, the issue is, for people like that, they then get scared because, oh, it's already run, right? It's already gone. So there's no point in investing now because it's always risky. You never escape the fear of investing, especially with very little to no education in the markets. You never. There's always a reason not to. It's essentially for them, for anybody who doesn't know anything about markets, who doesn't know anything about charting, who doesn't know anything about investing in this space, it's essentially always a 50-50 crapshoot. It's like going to Vegas, right? So yeah, I can't stress it enough. Education, education, education. If you want to make money in crypto, educate yourself. Not just about the protocols and all that stuff. That's great. But educate yourselves on how to invest and like how to read markets, because, you know, Bitcoin's a great investment. Ethereum's a great investment. Now, that's one thing. The other thing is when to invest. How to invest in it so that you can make money and time the market as best possible to be able to make money, right? Dogecoin, same thing. You can see here, you're about to break this head and shoulders, inverse head and shoulders pattern to the upside. And guys, apologies for these charts being truncated, right? Only reason is I'm using these updated USDT charts from Femex. I might just switch to, let's see. I might just switch to my regular old Binance charts. It's just I did that because I had to change a lot of my positions from USD to USDT because CMEX is phasing out their USD contracts. So good thing they told us when they did, because I would have been pissed halfway into the bull market. I had to close my positions. TRX about to break major resistance. A lot of these things are about to break major resistance. This episode was aptly titled, right? Bitcoin's about to go parabolic. The crypto market's about to go parabolic. Zilliqa, same thing. Look at that. This is quintessential bull flag, okay? This is a trading pattern, very common trading pattern. A descending wedge, a falling wedge, however people want to say it. Whoops. Okay, okay, there we go. I like that. It's a trend, consolidation, breakout. Okay, this is called a bull flag. This is your flagpole. This is your pennant. And that's what you typically get, breakout. And if you zoom out, you'll see that you're breaking major resistance. You see that? That's what we'd call a cup and handle pattern, breakout. So, left and right, it's just really bullish. People who sold after a little measly move, don't overtrade this. Don't. But, do whatever you will. But a lot of those people are under the assumption that this is a bear market rally and that we will remain bearish after this. Okay, RSR also breaking major resistance. That inverse head and shoulders, retest, you broke resistance, retested it as support. You're going. Same story throughout the crypto market. Dent. This one's a little different, but you're still dealing with a type of bull flag, right? You have this pennant or type of pennant that's about to break out, okay? So that's a bull flag on Dent. SHIB. This is breaking major resistance very soon with this cup and handle pattern, right? You're at major resistance. You're right on the neckline, about to break up. Okay, this is a 4-hourly time frame. This is a big deal. Crypto is going to go parabolic, right? The thing is, don't be fooled. Understand that this trend is likely to continue for a couple months, okay? My projected Bitcoin top, using my models, using my master chart, for months, if you follow my work, has been February 19th, 2023. Now, what does that mean? Does that mean that in a month and 8 days, I'm selling my positions? No. That's just a projection, a placeholder. I won't be surprised if by end of March, we finally top out. Or maybe April, right? It's a projected top. And also, let me just show you really quickly graphically what that means and how I got that. I'm not going to go through like the long tailed discussion of how I got it, but I'm just going to show you briefly how I make that time prediction. Okay, you make the time prediction. I made it using two things. Using the trend-based fib time tool. Okay, essentially I'm using my waves, using my Elliott waves. I'm taking wave 1. Whoops. Retracement of wave 2 from the, I took it from the orthodox low. Okay, so I didn't wait until the end of the consolidation reversal, and I used the 0618, and that's exactly where you see the end of wave 3. Okay, and that translates to about February 19th, February 20th. Okay, so that's one way to do it. The other way to do it was that I took the what I do. I'm trying to think what I did. I got it. So you understand that I use this channel, right? So I channeled these waves, and essentially when you go up to 1618, shit, I'm trying to remember the other way. There were two things that I did. I don't remember the other one. I'd be making it up if I said I did. And I really like the fact that April of 2024, which coincides with Bitcoin's next halving, right, where the supply is halved, so the price is likely to go up, that falls really well with the end of the next bear market on this chart. So I really like the timing of this chart, okay? The other thing that I want to mention before we go back to what we're doing is yes, there is such a thing called a throw over, okay? So right here we have it at the edge, the top resistance of this channel. But typically what happens is you get a little bit of a throw over, just like here you get a throw under, okay? This is a common occurrence when you channel your waves. So here we would call this a throw under. So it's not as if we did hit this, right? We went up, we came down for 3 waves. We did hit the end of, or the bottom support of this rising channel, but then we continued outside of the bounds of the channel. That's okay. That's what we call a throw under. Common occurrence in Elliott wave theory. All right? Just in the same way, when you go up, you can expect to go up a little more, or to break the upper resistance ever so slightly, and so that would take us a little longer. Do you see? So even though my projection's February 20th, it's not like if it doesn't happen February, that gives a little bit of room. The idea of the throw over in this case would give an error of maybe plus or minus 2 months, I'll say. It's unlikely that it's minus 2 months at this point, but plus 2 months. So I'd say from February 19th to April 19th, that's my window between late February and late April. Okay? Does that make sense? That's I'm not trying to cop out of my prediction. I'm just showing you technically how I'm not worried, and my prediction and my my work on this chart is still quite accurate. It's been really accurate. And it's still, even starting the bull run now, is still in line to hit. Right? So I know some people have questions about that, and so I hope that answers your questions. So what were we talking about? We were talking about our altcoins. Let's look at some comments. Akansha says, hi, I got a notification now. Your BTC targets for 2024. So yeah, if you guys are not getting notifications for the channel, sometimes YouTube stops notifications, or the notification app doesn't work. So what you do is actually you unsubscribe and then you resubscribe and you hit the bell, and you should get notifications again. Okay. Bitcoin in 2024, Akansha asks. This, like I said, is likely to come down after we hit our highs, right? In a few months. I believe that the next year, almost exactly a year's time, right, is spent in a downwards bear market. Okay, I think it's, so this is a wave 4. Okay, it's likely going to be a wave 4. So about a year to 400 days I'm seeing. Okay, and this coincides very nicely, like I said, with the next halving, because we know the next Bitcoin halving should be around May or April of 2024. okay? And that's usually when you do find a bottom. So a lot of people are saying, people who don't do technical analysis well, apparently, they're saying, well, we might get a little rally here or there, but don't expect Bitcoin to do anything until May or April of 2024, because that is the next halving. Okay? That's when you should expect a bottom. So expect about a year more worth of pain, or something like that. A year plus worth of pain. By then, we would have gone into a whole new bear market, more likely than not. Okay? So 2024, from 2023, mid-2023 to mid-2024, I see a lot of this. Why that? Because wave 4, so wave 2 is typically like this, right? A zigzag. Actually, a zigzag would be more like this, okay? Where your B wave goes between the 0.5 and the 618 of that A wave, okay? All right? So that's typically what you get in wave 2, right? More likely than not. Here we didn't get the zigzag. We got more of a flat correction. So, actually, all right, this is a great point, and I actually hadn't thought of this, so thank you for asking. There's something in Elliott wave called the principle, or what is it? It's called, I don't like to use the word law, so I'm trying to find the word that I use instead. And I think I use the guideline, okay? The guideline of alternation. Okay, the guideline of alternation states that in wave 2, if you get a flat correction, you should expect a sharp correction in wave 4, and vice versa. If wave 2 is sharp, wave 4 is more flat. Okay? Also, if wave 2 is simple, wave 4 is complex, and vice versa. So that's the guideline of alternation. It's so beautiful because these impulses, these price movements, there's like a character to them, how they correct, right? So we, in a 5-wave sequence, you have 2 different corrections, main corrections, wave 2 and wave 4. We just left the wave 2, okay, and now we enter wave 4. Given that wave 2 was a flat correction, actually, I would say it's a complex flat correction, because although you're dealing with an ABC flat, the C wave was a double zigzag. Okay, that's not something you see every day. A double zigzag. Shout out to, what's his name? Another Elliottician on YouTube. I forget his name, but he's the first one that floated that idea. I'm like, oh shit, that makes so much sense. I don't recall his name right now. But yeah, he floated that idea. And for the longest time, I was trying to read this, and I couldn't read this. I didn't know. I just wasn't thinking double zigzag, because it's not something you see every day. In wave C, you're just looking for the regular 5-wave impulse. I kept looking for it, kept trying to count it, couldn't count it. But if you count a double zigzag, it works. It works so well. Mathematically, just stylistically, everything about it works. Anyway, so I would say wave 2, although it's a flat correction, it's a complex flat correction due to the double zigzag in wave C. As a result, I think what you get in wave 4 is a sharp, right? Because this is a flat, so you get a sharp correction, which would make sense, right? You're basically gonna pull off the biggest increase in crypto history, that 12,000%, or I think we've put in 12,000% before in a bull run, but if it's not the biggest, it's gonna be close to the biggest, okay? And so the subsequent correction in 2023, mid-2023 to mid-2024, is going to be large, okay? It's going to be from maybe a couple million back down to maybe 250K, something thereabouts, okay? So that's going to be a sharp correction, okay? And now, so this was flat, this is sharp, this is complex. It might be simple. What's a simple yet sharp correction? Something like this. I wouldn't be surprised. Yeah? Something like this. Maybe it's, I don't know. Something like that. I don't know, because when you're talking about corrections, there's so many different permutations and combinations that price can make, but something like that takes you from a couple million back down to 250K, and it goes up and down like that. It's going to be ugly. It's going to be really ugly. So yeah, that's my prediction for 2024, mid 2023 to mid 2024, Akanksha. No. So Akanksha says, so you don't see Bitcoin going below 12K to below 12K next 2 to 3 months? No, absolutely not. I mean, everything's possible, but like, I just don't see it. I haven't seen it for years. I've been saying on this channel for years, this is the bottom, because this is a consolidation reversal pattern, and your flat corrections already been put in. Your minor wave 2 corrections have already been put in. Like, all that is you have 3 waves in A, 3 waves in B, and then some sort of impulse in C, right? Typically you get 5 waves. Here you got a double zigzag. That double zigzag is printed. Dan Dowd is his name. Dan Dowd. Okay? He loves double zigzags. He even does a lot of, the way I love, well, maybe not love, but let's say the way I study A/B basing, and I'm always looking for A/B basing. I'm like, doing my own research on A/B basing. Dan Dowd is the same for double zigzags. If you want to know anything about double zigzag, subscribe to Dan Dowd Trading. Okay, he's a double zigzag master. He floated it out. I was like, oh shit, that is so true. But you already got your double zigzag here, right? That's your first. That's your second. Done. There's nothing else. People who think it's going to 12K or 10K or whatever, I don't know what the hell you're seeing. But that's again the point. Like, everything's possible, not everything's probable. But why are people saying that? And I've said this before on the channel. A big reason, excuse me, while people are talking about 12K is because they don't know how to use charts. They're literally looking at the chart on an arithmetic scale. Okay, I know because Garrett Soloway on multiple occasions has done this on live TV, and they're drawing they're drawing a trend line like this. This is literally, I'm not even joking. I'm not trying to make fun of anybody. This is literally what, quote unquote world-class analysts are doing on live TV. They're looking at Bitcoin between $0 and $60,000 on an arithmetic scale, and they're drawing a trend line and saying, well, this is clearly support, and we have yet to hit support. Okay, that's why. That's the main reason. And I'm gonna say, what's his name? Garrett Soloway. I mean, you can do well not knowing how to use log on the smaller time frames, on the 4-hourly time frame or whatever. You go on the weekly time frame, you don't know what the fuck you're talking about. You go on the daily time frame, sometimes you're okay, depending. If you're using regular stocks, the thing is, he's a traditional finance guy. Stocks don't move like cryptos do. So you could get by in your life not knowing how to use a logarithmic chart using regular stocks, unless you're looking at 50 years worth of stock data, right? But if you come into crypto and you don't know how to use a log chart, you have no idea what you're talking about, especially with your high time frame analysis. That's the case here. Garrett Soloway being the force that he's in our space, right? We revere traditional finance guys, right? Because they know what they're talking about. They have licenses and stuff like that. They're established. Makes sense. They're on TV. And they dabble into crypto. So he has a lot of influence. His analysis, as absurd as this may seem, is extremely popular. And most people talking about 10 to 12K are parroting this analysis. This is the prevailing idea of the 10 to 12K thesis. You have to read the chart literally, in a weird way with no logarithmic scale on a high time frame, and then draw a trend line of all the price action and then see that the trend line hits around between 10 to 12K. So yeah, that's that. But yeah, it's not Garrett Soloway's fault. And Garrett Soloway has a successful trading business, takes people's money for trading tips and all that stuff, for memberships. And again, you can get away with this in regular stocks. You can get away with this on small time frames. You go on large time frames and do this, you will lose all the time, every single time. But one of the reasons this doesn't affect him much, because he's looking at regular stocks, and regular stocks don't move parabolically like crypto does. I hope that answers your question. Okay, even Crypto Savvy is saying more downside. My question to you, Akash, is when is Crypto Savvy not saying more downside? Crypto Savvy, I mean, look, I stopped listening to Crypto Savvy when he said one thing, okay? I used to watch his channel a lot, and I watch everything. I used to watch everything, right? Because I'm trying to learn. And I always have the idea that people have things that I can learn. I don't know everything. You might know something I don't know. Great example, Dan Dowd taught me about double zigzags. Then I took that idea, I took that understanding, I took that information, and I went into my manuals. I went into, Prechter and Frost, and I looked up and I studied on my own double zigzags, when they happen, how often they happen, all that stuff, right? I did my own research afterwards. I didn't just say, oh, Dan Dowd says this, Dan Dowd says that, and I'm going to listen. But Dan Dowd knows a lot of stuff. He knows a lot of stuff. In terms of technical understanding of Elliott wave theory, he knows a lot. I'll just say that, okay? I don't agree with a lot of his conclusions. I haven't watched him for a while, so I don't know what he's thinking about the recent happenings, but he knows, like, the bits and pieces, right? I don't agree, again, about his reads, and he's not a proponent. I don't think he acknowledges A/B basing at all, so that's a huge issue for me, because that's a whole phase of price action right there that you're just ignoring, right? If you don't agree with A/B basing, then what the hell is this? You have no explanation for this, other than to make it part of this, which is part of the issue. If you don't know A/B basing exists, right, then this is incomplete, and this is part of this. Does that make sense? And so you can't, even the double zigzag guy, Dan Dowd, can no longer say this is a double zigzag, or if he says it's a double zigzag, then it's not finished. This is just the first part, right? This is part 1 of the double zigzag. Part 2 of the double zigzag, I think this is what he's saying. I haven't watched him in a while, but this is what I think he would say. This is the first part of the double zigzag. This is the second part of the double zigzag. And then we still need the final part of the double zigzag. That's probably what Dan Dowd's saying. But all of that comes out of the main issue that you don't acknowledge a whole phase of price action, even that Ralph Nelson Elliott himself acknowledged. It's called A/B basing, okay? Just because Prechter and Frost have 15 editions or 12 editions and didn't acknowledge it doesn't mean you don't have to, right? That's what I'm saying. Do your own research. I love Prechter and Frost. I read their manual all the time. But just because they say A/B basing doesn't exist or Ralph Nelson Elliott made a mistake there, I don't agree with them. You got to do your own research, right? This is another reason this is clearly a bottom to me. Look at this. And look at actually what this means. Right here, I just drew a trend line from the top in 2017, the top of the bull run in 2017, to where we are now. What do you see? Very clearly, the consolidation reversal channel that we had starting in June of 2022 occurred on this trend line. Not only that, even though we dipped below, we are just right now about to break that main resistance, right? Just like I said, we're about to break. I said earlier in the video that we're going to break this 200-day resistance, right? Of this kind of consolidation reversal channel, this AB base accumulation of this drawdown, of this double zigzag. But now we're also going to break this resistance right here, which was put in place. Well, it's actually, yeah, it's support, but it became resistance when we dipped below it after the FTX debacle, right? On November 10th, 8th, 9th, and 10th, right? So again, Do your own research. Look at what makes sense. We're just about to break two high time frame resistances. One 200-day resistance and one 1900-day resistance. We're about to go parabolic, okay? There's a lot of different theories out there, but you have to make your own mind up. It doesn't matter what Dan Dowd says. It doesn't matter what Crypto Savvy says. It doesn't matter what, Proctor and Frost say or what I say. It matters what you think. And then it matters what you do with what you think. That's all that matters at the end of the day. Everybody's going to have an opinion, right? That's the beauty of life. Everybody has an opinion. Everybody has a right to have their own opinion. Okay, now, when did I stop listening to Crypto Savvy? No disrespect to Crypto Savvy. I learned a few things from him. But why did I stop listening to him? Because he said something that was categorically false. I called him out on it. And in all lack of humility, I wasn't offended or anything. I just got to a point where I'm like, I will literally hurt myself by listening to you any further because it's clear you don't know what you're talking about. And it was something fundamental. It was a correction. I asked a question. I said, what was it? I'm trying to remember what it was. He said something that was like, what are you talking about? Let me try to remember. It was something about flat corrections. Yes, I remember. We're talking about flats and zigzags, okay? A zigzag is something like this, yeah? A zigzag is a 5-3-5, okay? It's 5 waves down, 3 waves up, 5 waves down, okay? And that 3 waves up goes between the 0.5 and the 6.8. Every manual on cryptocurrency on Elliott wave theory will tell you the same thing. There's nothing controversial about any of this. Okay, find me one that doesn't, like an actual proper manual. We can talk maybe. There's literally no discussion about this. It's not a debate. A flat correction is categorically understood as being 3-3-5. Okay, 3 waves down, 3 waves up, 5 waves down, or 3 waves up, 3 waves down, 5 waves up, right? Depending on, what your market is, bull market, bear market, whatever. Okay? Crypto Savvy one day was like, oh, this is clearly a flat correction. I'm like, but how can it be a flat correction? Because it was a 5-3-5. He goes, yeah, there's some flat corrections that are 5-3-5. I'm like, ooh, are you sure about that? I gave him a chance. I said, are you sure? He's like, yeah. And I'm like, I don't know about that. And then somebody else called him out on it. And then he pulls some random internet page up. And I'm like, I literally referenced Proctor and Frost. I referenced another manual that I use. I forget the author. Elliott Waves Made Simple. Steve something. Steve Sinclair. I reference like all these basic, references and also my experience. Like, look, anytime you look at a flat correction, it's 3-3-5, right? It's 3 waves, 5 waves. And when I say 5 waves, I mean it's an impulse, right? In the case of right here, this flat correction or this impulse was a double zigzag, so it's not 5 waves, but you know what I'm talking about. There's no such thing as a 5-3-5 flat correction. 5-3-5s are zigzags. When Crypto Savvy said that, I stopped listening to him because it's one thing where, everybody makes mistakes. Sometimes you say stuff and you're like, oh shit, I can't believe I said that. So I gave him a chance. I said, but Savvy, you're talking about a zigzag. There's no such thing as a 5-3-5 flat correction. And then I showed him, right? And he still said no. And I'm like, oh, you don't have good fundamentals. That's what it is. Whether he knows it or not, he doesn't have good fundamentals. And even without good fundamentals, with what he knows, he's gotten by. I guess he's profitable. Maybe he's profitable. I don't know what his P&L looks like. But that's just, it goes to show you. It doesn't matter. if people have channels and people have followings, that they know what they're talking about, myself included. Do your own research. That's will be and always will be my sort of call to action. Do your own fucking research, and trust but verify. If somebody says something, you think it's interesting, take it, go do your own research with it, right? Dan Dowd taught me about double zigzags. I took it, I did my own research with it. I incorporated into my understanding of the wave principle. Okay. We were looking at stuff, and I think I was on Algorand. I talked about Dodo. Did I talk about Dogecoin? Let's go back on. I know I talked about Dodo. Let's go back on the small time frame. Yeah, I hope that answers your question, Akanksha, why I no longer listen to Savvy. He's not a bad guy. It's just, I don't think he knows what he's talking about. And his comparing Amazon, like, that's so weird. Just because you can compare a chart to another chart, like, the underlying supposition that because the tech boom worked this way, then crypto is going to work the same way is weird. It's just weird. Because if you claim to understand the wave principle, you're going to use the principles therein, right? You're going to use your skills in reading 5 waves up, 3 waves down, sideways markets, all that stuff. You don't have to pull some random chart and say that, you know how many patterns there are in existence and how many it just doesn't make any sense, right? He clearly doesn't have a good handle on the wave principle, Elliott wave theory, right? Which is whatever. Okay, Dogecoin. We talked about Dogecoin. Tron, we talked about Tron. Zilliqa, yeah, I talked about the cup and handle. RSR, I talked about this inverse head and shoulders. Dent, I also talked about it. SHIB, this is another cup and handle, guys. All right, you're about to break out. Crypto is going parabolic, okay? And now, my surprise. I bought yesterday with some leftover USDT. I bought Bunk. Bunk is a meme coin, okay? And I do not, let me just flat out say this at the outset. Do your own research, not financial advice. Do not complain if something goes wrong, whatever, right? I'm going to do this because it's fun. This is why I'm doing it, because it's fun. Part of crypto is to invest in the shittiest coin you can possibly imagine and then watch it pump to heaven. Like, just do crazy things, okay? And usually, you can only get the craziest pumps out of those assets that have the lowest market cap. So let's just open coin market cap really quickly and let me show you. Okay, so I did do some research. Okay, I did do some research, and again, let me preface this. I have 6 figures invested in proper assets in the in Bitcoin, XRP. Like, you guys know my watch list. Okay, I have a proper, serious, like, conscientious investments. This is a small investment. This is my smallest investment by far. Okay, a few $100s, and it is in a meme coin. It can go to 0. I don't think it's gonna go to 0, and I don't necessarily think there's any utility to it. Okay, there is absolutely 0 utility from what I can see, other than that it's fun, and it's a meme coin on a struggling blockchain. Okay, so I thought I want to have some fun. I want to take a big risk, right? When you take a big risk as an investor, I think, wait 1 second. I don't know why it's not pulling up. When you take a big risk as an investor, it's smart to put very little capital into that risk, right? So if the big risk gives big return, then it's okay. But if that return goes to nothing, you're still okay, you know? So that's my thinking. I'm just trying to have some fun. I want to be invested in something completely stupid with a ridiculously low market cap, right? With a low rank, right? You see, the market cap's just $50 million. And so when you have a very low market cap like this, you can make moves, like really, really volatile moves. And that's what you tend to do. Now, I invested in this range, right here, okay? And then what happened right after was this, okay? I kind of like, oh shit, what have I done, right? But actually, when I really think about it, it's not that bad. There's no issue. It's not a big issue, right? When I look at this, right, obviously I don't have much price action, but I look at this as a 1, 2, 3, 4, 5, right? Excuse me. This is just a complex correction, complex wave 4. This is wave 5. And what happens here, you're going to put in a consolidation reversal, and then you're going to pump, okay? This just got listed on my exchange on the 10th, on Femex on the 10th, okay? And this token is relatively new. So what happens with these new token allocations is you typically see these impulses to the downside. These impulses to the downside fundamentally represent new holders, all right? People who are on, because it's a Solana token, right? On the Solana blockchain, they were just given this airdrop, okay? They're like, I don't know what the hell this is. This is useless. What are they going to do? Sell it. They're going to take profit immediately. That's what this is, okay? So it's not out of the ordinary. It's not crazy, okay? So it hasn't really done anything yet, and I like that. So I looked at the chart. I was like, I don't have much chart information. Fundamentally, it's the first meme token, first meme coin on Solana that I know of. Is it going to disappear tomorrow? I don't think so. It can, but I don't think so. I have a feeling, given the timing that this token was introduced into the market, right, at the beginning of the bull market, essentially, that it's going to really do wonders. Okay, so I'm trying to basically, I'm taking a higher risk because I'm a pro, and I thought about this in ways that I don't think most investors could. If I was a regular run-of-the-mill speculator with, not any experience, I don't know how to read a chart, I'm also going to sell this if Solana blockchain gives me an airdrop of bunk. Why wouldn't I? Like, what's the prospect? Like, what is Bonk going to do? Is it going to run a sovereign state? Is it going to, replace the Swift money transaction system? No. I don't know what the hell it's going to do. But I think it's going to pump. I think it's going to pump. And I like it also because it's in the zeitgeist. People are talking about it. It's popular. And so I think it has a chance to just go up once we finish this consolidation reversal, okay? And even though I invested a little bit, I do expect for it to do a lot. I'm probably going to hold on to it for the length of the bull market and see. So this is a little experiment. I would not be surprised if this really small market cap, this $50 million market cap asset, does ridiculous price action to the upside because it's so volatile, okay? And that's another reason why last night, after I bought it, almost exactly after I bought it, it comes down 50%. I lose 50% of my investment right there. I get a little worried, but not really, because I understand this is extremely volatile. High highs, low lows. Anytime it moves, it's going to move big. So that move, I shouldn't overreact to it just because it's 50%. It's not like the fundamental sort of worth or the the fundamental nature of the asset has changed, right? It's not like it's been rugged, or they're filing for bankruptcy, or the team has been like sort of, or the SEC shut the coin down. You see what I mean? Like, this is just regular price action. I can disambiguate this from like, oh, a scam or anything like that. I know a lot of people, a lot of influencers are probably, oh, it's a scam, it's going down, it's going down, it's a scam, everything's a scam because it's going down. Some things that go down are scams. FTT is a scam, and it went down like a scam. Solana also broke support like a scam. Luna broke support like a scam. There are differences. I mean, we could look at it, but that's beyond the scope of what I want to present here, so I'm not going to. But this did not go and draw down like a scam. So I'm still very confident that this is going to do a lot. And so what I'm seeing here is some A/B basing, consolidation. So this was your initial break of structure. This was your counter. Okay, and what I see is we're putting in a zigzag. So I'm seeing the next move up like this. Maybe the second degree B wave is like this, or maybe it's another zigzag. That's also possible. Another zigzag, a pivot, and then an impulse, okay? But anyway, I see A/B basing here. It could take this form. It could take, like I said, this form, okay? But eventually, what I see in short term, right, in a matter of days, this is going to happen. And given the nature of this asset, as small a market cap as it is, I won't be surprised if it starts going, when it pumps, other tokens pump 50%, this pumps 500%. Okay, so I'm excited about this. I think part of what is cool about crypto and why we're into crypto is because it's fun. And so this is me having fun. Everything else is like real serious. Even my Shiba Inu and Dogecoin investments are really serious. Okay, the money I put behind Dogecoin and Shiba Inu, it's not no laughing matter. Like, that's serious money. But Bonk, I'm not putting any serious money behind, and it makes the bull run fun. So that's what I did. That's why I did it. Again, do your own fucking research. Don't come to me and say, hey, Dean, Bonk went to 0. You scammed me. Give me my money back. Conscious says, could you see the reef chart? Let me see. Let's look at reef. I want to say that reef is a DeFi, reef finance, right? I just want to. DeFi, I'm a little wary on, because anytime, right, it's really easy, it seems, to hack DeFi protocols. At least there's been so many. And so my only worry about anything DeFi related is, and that's why I've been really light on my DeFi investments. Anytime somebody hacks it, or even a bridge, even though if the protocol is safe and wasn't hacked, if a bridge to the protocol was hacked, then that affects the token. So I'm just extra careful with DeFi in that way. And I feel like DeFi is going to have to really prove itself once again, given all the, everything that happened with FTX and all the funny business, rehypothecation and all that stuff. Like, it's going to be hard for, I guess it's going to happen again, because we always say this, every bear market, that's never going to happen again. Like, once money comes back into the space and things go up, people are going to once again want to earn yield on their assets. And they're going to once again give up their crypto to centralized or decentralized protocol. And yeah, hacks are going to happen. People are going to lose more money and stuff like that. So yeah, whatever. Reef looks like everything else. It looks like everything else. You can see here very clearly the past 300 days have been accumulation. The past 300 days have been sideways. Okay? So you've dipped below the resistance, or sorry, you've dipped below the support, but you regained it here. So that is what the Wyckoff people would call a spring. And do expect to move up to here, retest this, and keep going. Okay, so yeah, Reef looks like everything else. Just like everything else we looked at today in the altcoin space, this looks like some sort of inverse head and shoulders that you're about to break up and out of. So yeah, guys, that's pretty much it. We're doing well. Everything looks good. This is when I can finally start to breathe and relax and enjoy the fruits of my labor personally. This has been a very, very trying bear market. Lots of pressure, lots of work. And, this kind of price action, this time in the market is more relaxing, your positions go into profit in such a way that, you lock profits in, you set stops into profit, into heavy profits, and you don't really care to look at anything because, things are going to fluctuate, right, as the markets do, up and down, but more up than down. And so, yeah, it's just a lot more relaxed. So I am excited. I think we've waited long enough. That was a long 600 plus days. Probably the longest 600 plus days of my life. Anyway, that's it for me. Hope that was helpful. Hope that was useful. Like, share, and subscribe as usual. And I will see you tomorrow.